Hey, it's Brand the Mortgage Man, and let's talk about mortgage insurance. You know, that pesky extra cost that's added to your monthly mortgage payment. It's something a lot of people don't love, but for many home buyers, it's unavoidable. But here's the good news. You don't have to be stuck with it forever. In this video, we're gonna dive into what mortgage insurance is, why it's required, and why most importantly, you can avoid it or get rid of it once you're in the home. So let's get started. All right, so what exactly is mortgage insurance? Mortgage insurance, often called PMI or private mortgage insurance, is typically required when you put down less than 20% using a conventional mortgage. It's designed to protect the lender in case you default on the loan. If you're using an FHA loan, you'll pay MIP or mortgage insurance premium instead of PMI, but it serves the same purpose, protecting the lender. Now, here's the kicker. Mortgage insurance doesn't protect you, the borrower. It's just a way for the lender to feel more secure lending you the money if you don't have that 20% down. So why is mortgage insurance required? In simple terms, it's all about risk. The lender sees you as a high risk when you don't put down 20% because there's less equity in the home. If something goes wrong and you default, the lender stands to lose more money. But here's the thing. Even though PMI benefits the lender, it's something you have to pay for. So how much does mortgage insurance actually cost? Well, it depends on a few factors, like the size of your loan and your credit score. On average, PMI costs between 0.3% and 1.5% of the original loan amount each year. For example, on a $250,000 loan, it could cost anywhere from $750 to $3,750 per year, which breaks down to $62 or $312 every single month. If you're using an FHA loan, MIP costs a little more. It's typically 1.75% of the loan amount up front, plus an annual premium of 0.55%. So how can you avoid mortgage insurance altogether? The most obvious way is to put 20% down on the house. If you can save up that 20% down payment, you won't have to worry about PMI at all. This is the simplest route, but it's not always possible for many buyers. Another option is lender-paid mortgage insurance, or LPMI. Some lenders will pay your PMI for you in exchange for a higher interest rate. So instead of paying the PMI monthly, you'll just pay more over the life of the loan. Piggyback loans are another option. This is when you take out a second mortgage to cover the part of your down payment. For example, a common 80-10-10 loan is where you have an 80% first mortgage, a 10% second mortgage, and 10% down payment from you. This way you can avoid PMI, but you'll have two loans to manage. And don't forget about government-backed loans. If you're a veteran, a VA loan offers zero down and no PMI. If you qualify for a USDA loan, that's another option with no PMI and zero down for homes in rural areas. All right, let's just say you already have a mortgage insurance, but you want to get rid of it. Can you do this? Well, yes, you can. For conventional loans, PMI can be removed once your loan to value ratio reaches 80%. That means once you've paid down your mortgage towards 80% of the home's value, you can ask your lender to cancel the PMI. For FHA loans, the process is a little bit different. You'll need to refinance to get rid of the MIP. There's no easy way to just cancel it. Just be sure to keep track of your loan balance and LTV ratio, so when you hit that 80% mark, you're ready to ask that lender to remove the PMI on your conventional loan. So there you have it. Mortgage insurance is a necessary evil for many buyers, but with the right strategies, you can either avoid it altogether or get rid of it once you're in the home. If you're wondering if you qualify for a loan with no PMI, or if you need help understanding your options, drop a comment below or schedule a call with me and I'll break it down for you. And if you found this video helpful, don't forget to like, comment, and subscribe so you can get more mortgage tips straight from Brand the Mortgage Man. Thanks for watching, and I'll see you in the next video.
Yeah.